Sorry, it's the wrong thing. Oh, it is recording, I hope. Okay, so hopefully this is recording here. So any expense. Now, you notice it's on the left of the capital account. So it's going to be opposite of the capital account. Okay, except for debit is still the left. Credit is still the right. Okay, so since it's the opposite, our normal balance is going to be the debit. Our increase side is the debit. Decrease side is credit. Okay, because eventually this account will decrease our owner's equity. Okay, so remember, an expense is a cost of doing a direct cost of doing business. Okay, questions? All right, next one, again, I'm just going to move down here. So I'm going to do owner, comma, drawing. So this isn't a direct cause of doing business, but it is still going to decrease the owner's capital account eventually. So go ahead and name it owner's drawing. Okay. Left side is still debit. Right side is credit. Okay. Again, it's opposite of the capital. So normal balance, increase, decrease. Questions on that? Okay. Last one is revenue. Okay. And again, it can be sales. Any revenue account. Eventually, revenue will increase capital. And since it's on the right side of the capital T account, it's the exact same as the capital account. Okay. So debit, credit, normal balance, increase side is credit, decrease side is debit. Okay. Questions about those? All right, so March 11th, we have a transaction. Somebody want to read it? I haven't read yet today. So we got Amber Parker. Oh, I'm sorry, 49 in the textbook, 27 in the workbook.
Sold services at Joe Motors, Erickson.
Okay, sold services on account, right? We gotta make sure we get that. So are we getting cash right now? No, we're gonna get it later, right? So first thing I ask myself is what two accounts are gonna be affected? So in this case, we're going accounts receivable. I'm going to say Jonas, that's probably wrong. Erickson. Okay. And sales. Okay, how are these classified? Accounts receivable is an asset. Sales is a capital account. Revenue capital account. Okay? So, does Jonas owe us more money or less money?
He owes us more.
He owes us more. So we're going to increase that asset. Do I have more in sales or less in sales? More. So I'm going to increase sales. So to increase an asset, I put the $125 on the debit side. To increase a revenue, I put $125 on the credit side. Okay. Questions? March 13th, Amber, please. Received cash for sales, $260. So I ask myself again, what two accounts are going to be affected? Well, we received cash because of sales. Okay? Cash is an asset, right? Sales is a revenue capital account. All right? So I have more cash now, right? So I'm going to increase the asset cash. I'm going to increase the sales account. All right. So I put, to increase an asset, I debit $260. To increase the sales, I credit $260. Questions? All right, now we're back. Anybody can open this up. March 14th.
Paid cash for telephone bill, $54.
Okay, paid cash for telephone bill, $54. So I asked myself, what two accounts? So I paid cash, right?
Any expenses?
It's, yeah, generically, it's an expense. Okay, in this case, telephone, electric, water are all types of what? I don't know, they're expense, it's an expense, but not communication, the water, utility bills, right? So this one is actually going to be utilities expense. Okay, and we paid cash. Again, later on, if we look at the beginning of the chapter, we would see a little bit of a chart of accounts to know what expense to put this into. Okay? So, utilities is an expense, cash is an asset. Do I have, after I pay the bill, do I have less cash or more cash?
Less cash.
Less cash. Did I increase how much? It's kind of a weird question to ask if I, have more left or left, but I paid them more money, right?
Right,
So
so
you
you
don't
on
owe
the
as
debit
much.
side because it's an expense.
What's that? Debit side because it's an expense, right? Okay, so it's kind of a weird, so to increase an expense, I've already paid it, so I'm going to debit that $54. And I credit cash 54. And they don't really classify it as, and I know, Amber, you said liabilities. I want to get back to that. They don't really classify it as a liability because it's too short term, I guess. Once you get the bill, you pay it. It's not carried over from month to month. Okay. So that's why it would be an expense. It doesn't go into that liabilities section. All right. Questions about that? Next account. Next transaction.
Wouldn't that make it to where it was uneven then?
What?
Because you increase one side and decrease the other?
No. Remember, this is on the other side. It goes against that accounting equation. Okay. So where I said as you go across the equal sign, it's opposite. As long as now we got debit and a credit. That's all we care about. Okay. And we start off our expenses with 0 at the beginning of the year, or the fiscal period. That makes sense? All right. March 16th.
Received cash on account from Johannes Erickson.
All right, so they paid us what they owe, and this, yeah, we're going to say full amount of what they owe us. Okay, so I asked myself, what two accounts are affected? Well, I received cash because accounts receivable, Johannes Erickson paid us part of what they owe. Why don't I put sales again?
Because you already have that in your equation.
Right, because of the accounting concept, realization of revenue, I've already put that into the sales account. Okay, so all I gotta do is change it from one asset to another. Alright, so I received cash, so my cash goes up. Johannes now owes us less money. So to increase an asset, I'm gonna put 125 under cash. To decrease an asset, I put 125 credit. Okay. Questions? Everybody good? All right. Last transaction. Right, so the owner took out $200 cash. So, the two accounts that are affected, well, cash
And owner's drawing.
and owner's drawing. So in this case, John Jensen is the owner drawing. Okay. Cash is an asset. John Jensen drawing is an owner's equity account that will eventually reduce capital, right? Okay, so he took out more of his assets, right? So I'm gonna increase how much he has taken out of the business. Is that a good way to refer to that? Okay, so I'm gonna increase the drawing account. He took it out in the form of cash, so I'm gonna decrease cash. So to record an increase to drawing, I'm gonna debit $200. And I'm gonna decrease cash $200. And now I'm kind of thinking about, we talked about that, do the same thing as you go across the equal sign. Remember, eventually this is gonna reduce capital. So in a way, we are doing the same thing on both sides. But right now, just worry about debit or credit. Okay. The reason we don't do it directly into the capital account is this way we can kind of we can find errors, and we're not gonna mess up the capital account too much. Okay, and we know exactly why that money was taken out. Because drawing, we can't write that off our taxes. Some expenses we can write off of taxes, so we need to keep that stuff separate. Okay. Questions? All right, so we need to first finish up 2.2 in application problem, and then you can do 2.3 application problem, page 53 in the textbook, 31 in the workbook. Okay? And if you want, you can get started on the study guide. Tomorrow will be a work day.